if Bitcoin really replaces, maybe in the next decade, gold as a store of wealth majorly, and if gold price does go down and gold is no longer considered a store of wealth, then will it still be used or be sought after as a as jewelry? And will it still be offered to God? We want to give God, or we offer things to God that are valuable to us as a sign of respect, as a sign of our love. You don't offer rocks to God.
Hi guys, welcome to another episode of Money Shot. In the last few episodes, we must have spoken about gold a lot, and we have told you that we will dedicate an episode to gold and Bitcoin. So this episode is about gold versus Bitcoin. We are going to cover the main characteristic similarities. What is gold? What is Bitcoin? Why are it so similar? Why do they get talked about in the same sentence so often? And then we have some questions for each other. So I'm Davis.
I'm Parikshit.
And I'm Vishesh.
So Vishesh, why don't you start by explaining to us the key similarities, differences, and the whole concept of gold versus Bitcoin?
Yeah, absolutely. So to start here, I'd like to talk about properties of money. These are properties, or you may call it characteristics of money. These are different from what I have mentioned in previous episodes, where I talk about three use cases of money: store of value, unit of account, medium of exchange. These are different. So let's go down the order. There are about 5 properties of money. The first one is divisibility, right? Money has to be divisible so that we can make the smallest of transactions, right? Smallest denomination of transaction. I think the smallest thing in our lifetimes was, when we were growing up, was probably something that was worth 25 paise for a candy or something. That's the cheapest that I remember things to be. But the money has to be divisible to that small unit. The next one is durability, right? It has to be persistent over time. It should not rot. It should not corrode. We gave an example in previous episodes of why is banana not a good, type of money, because it will rot. Why do we not choose any other metal as a form of money? Could we choose iron? Well, iron corrodes. So yeah, it has to be durable, last over a long period of time so that it can hold value. The third is recognizability or auditability or verification of money, right? The idea is that one can look at it and quickly verify its authenticity. We can do that, with banknotes, right? There are certain security features in that fiat currency that government issues. You can hold it under UV light or a microscopic lens, and there are a lot of ways to verify that this is not a counterfeit note. Similarly, gold as well, right, is verifiable. You can, go to a trusted third party. You can go to a jeweler and show him a gold bar and say, hey, can you verify that this is pure gold? And he can do that. The third is portability, that it can move across long distances easily, and it can be moved securely. That is kind of the reason why we moved away from gold, right? Gold was not easy to move. It was not portable. It's heavy. It's bulky. And then we get to the last point, which we've talked about before, which is scarcity. Scarcity, which is the attribute that makes it valuable, makes it a good store of value. So on these fronts, if you look at the history of money, we've talked about, what kind of items or assets has mankind used as money. We've used seashells, we've used rice, we've used cattle. But if we look at all of those, and you can think about it, they were not all very good on all 5 parameters, right? On all 5 parameters, there is divisibility. If let's look at cattle. At one point of time, people would use cattle as a form of money. How do you divide cattle into the smallest unit? Durability. If you use bananas, how do you make sure that it doesn't rot? Recognizability. You use seashells, and somebody finds a rock that looks like a seashell and says, no, this is a seashell. How do you verify its authenticity? Portability. Gold had that issue, portability, even seashells, right? How many seashells? If I want to go buy a house with the seashells, how many seashells am I going to need? And then, of course, scarcity. Scarcity, right? Salt, rice, bananas, how do you make them scarce? So, all these assets proved to not be good form of money, and as human civilization or mankind realized that these are not, because of one of these failings, because of one of these five characteristics on which they were failing, we moved on to a better form of money over time. And that history tells us that eventually what happened is we arrived at the best form of money, which was metal. We naturally selected metal because metal took care of the other four. It took care of divisibility, durability, recognizability, and portability to an extent. And it was scarce, right? Like all others were not going to be scarce, so it was scarce. And it actually was selected while it was not perfect on the other four parameters, right? Like, gold is not very portable. Yet, on the scarcity front, it was so important. And so, that I think is important for us to understand that what was valued by the global economy, which of the five attributes was most valuable, right? Even though gold was not perfect as a portable asset or a divisible asset, because of the fact that it was so supreme in terms of its scarcity, it was chosen as the last form of metallic money, so to say, right? Last metal that was known to be money, and it continues to play a pseudo money sort of a role. So it has never been replaced for that. So, what are the drawbacks of gold on these five parameters, right? There are basically three that gold is not really good at. Gold is not really good at divisibility. We were going back to my example of the smallest transaction, right? If I want to buy one candy with gold, and if it is worth 25 paise or 25 cent or whatever it is, I would literally have to take a gold bar and take a sandpaper, go to a store and scrape off some gold, which will be worth 25 paise. Gold dust is what will be equivalent to that amount of transaction. And how does he verify that? So it's so inefficient. It's not divisible. Portability, we've already talked about it. Large, heavy, long distances, transactions, difficult to do. Recognizability or verifiability, right? Authenticity, that's the third drawback. We think that yes, oh, gold is verifiable. You can take it to someone and he will verify it for you. But imagine what kind of friction that causes in a seamless trade or seamless transaction and global payment infrastructure. Just imagine what kind of friction that will cause. Every transaction, every time you receive a gold bar, now I have to go to a third party who can verify that this entire bar is pure gold. And there are scams, right? Like they'll plate it with gold, 2 inches thick, there's gold, but in the middle is something else. It's not gold, it's an alloy. So did you go and melt every bar down and break it down, and only then can you verify it? How can you do seamless transactions, and how can you do instant trade like that? And those kinds of scams happen even today. So on these three scales, gold became inferior. I shouldn't say inferior, it was not perfect, because it was still not inferior to anything until the discovery of Bitcoin. So, anyway, to address these three factors or downsides of gold, the world moved on to okay, what's the next best form of money? They moved on to government backed fiat currencies, coins, and paper notes. But in addressing these three drawbacks of gold, we lost out on the biggest factor, which was scarcity, right? We chose gold because it was scarce, and then we let go of that scarcity factor for fiat currency. But that didn't happen overnight. When we moved from gold to fiat currencies, the first transition was all central banks globally, when they agreed to use gold as a form of money, pegged their currencies to the value of gold that they were holding. So they were bound by how much gold reserves they had, and they could only issue as much fiat currency equivalent to, in their economy, equivalent to the gold reserves that they had. But unfortunately, this is where comes the problem of trust, right? We trust a third party. Government is at the end of the day a third party, and a central bank is a representation of that third party, who we trust to not inflate away the value of the fiat currency that they are in custody of or they are responsible for by printing it away. But they didn't quite do that. Over the years, there is no country that sets a good example for withholding or upholding that trust that the world put in them to safeguard these currencies. And they kept debasing these currencies. And why do they do that? They do that because of bad political decisions. Simple answer is, I mean, you look at when these recessionary situations occur, the easiest way for politicians to get out or global leaders to get out of trouble is, hey, let's print some money, let's give some free money to paper over the cracks of these poor economic decisions that have been made over the years. And let's get out of the situation. I am a democratically elected leader. I need to solve for this problem in the moment and get out of it. It's not my problem 50 years down the line when this thing will really blow up, which is the cusp of where we are standing right now. At the end of the day, these are basically, this is, I just wanted to establish gold, how, what gold was chosen for and what are its drawbacks. And now, so if I go back to the same thing, right, these five attributes for Bitcoin, properties of money. So, divisibility. Bitcoin, one single Bitcoin is right now divisible into 100 million units. I mentioned before in a previous conversation that one rupee or $1 is divisible into 100 units, but Bitcoin is divisible into 100 million units. And it can be further divided if needed, right? If the price of Bitcoin goes too high, let's say one Bitcoin, I'm not saying this is a prediction, but just for hypothesis, if one Bitcoin was worth 100 million, then every unit would be worth $1. And then you'd say, hey, how do I do a 50-cent transaction? Well, we can make every Bitcoin break it down to 200 million units, no problem. So divisibility, it's great at divisibility. Durability, Bitcoin will live as long as internet lives. If you see internet wrapping up and shutting shop and we getting a better technology, then we can talk about it. But otherwise, it's like software, right? There is nothing that can kill it. Recognizability. I think this is where one of the things, right, I harped upon, right, that the auditability of gold and verifiability of gold is a clunky process. It's not as smooth. Bitcoin, it's very easy. You send a Bitcoin to the Bitcoin network. If it is really a Bitcoin, it'll be accepted by the network. Otherwise, that transaction will be rejected by the network. You try to create a fake Bitcoin or you try to add in a transaction a Bitcoin that never existed. So let's say, example being, I have 5 Bitcoin, but I try to enter a transaction in the public ledger, the Bitcoin public ledger, where I say that I am sending 6 Bitcoin to Davis. So I am trying to, this is what basically is called double spend, right? I am trying to spend more than I have. The moment that transaction goes through the blockchain, when it goes to get validated, the miner will immediately identify that this is not a valid transaction. Forget about the miner. Let's say the miner makes that mistake or is a hand in glove with me. When he publishes that transaction to the entire network, the rest of the network knows, because remember, the entire ledger has been built from the day one. Every Bitcoin is accounted for from the day that it was issued, where it is sitting and in which wallet. So if a certain wallet, the last ledger entry says this wallet has 5 Bitcoin, and now the new transaction in the ledger shows this wallet has sent 6 Bitcoin, that's it. That's where it fails. The entire network will deny that transaction. So it's immediately, verifiable. Portability. I mean, things just keep getting better, right? Like, how can you beat Bitcoin, which is a payment communications network? It is at the end of the day a communication network in which you are communicating transfer of value, and it is happening all over internet. I can't even compare this to gold. It's foolish to compare this to gold, right? And then scarcity. So we all know gold is scarce. Gold, there is only so much gold in the world, and we know that the inflation of gold, which is basically the new gold that is coming, inflation at the end of the day is the new money being printed, right? So, what is the money printing form of gold? It is the new gold that is mined, that is being mined from the earth. And new gold that is being mined is estimated. Again, nobody knows, none of this is verifiable because it's not a global network or anything. Everybody is, you know, they could be miners that we don't even know about who are mining gold, but it is estimated that the inflation of gold is about 1.8% per year. So there is a consistent, steady inflation in gold. Now, I won't even go on to say, or at least, well, I am going to say it, but I'm not going to stress on the fact that right now there are people who are trying to find gold on other sources of gold outside of Earth, right? They're looking at asteroids where they could mine for gold. Now, we don't think that this can happen in the next 5, 7, 10 years, but could this happen in the next 20, 30 years? Look at Elon Musk. In fact, Elon Musk is one of the guys who made that statement. So could this happen in the next 20, 30 years? The way his company SpaceX is, progressing. If it does, then the inflation of gold can increase even further. And so we know that inflation is, we've sort of established that inflation is at the end of the day the root cause of causing debasement of money. Money loses value and it is not a good store of value because it's no longer scarce. Inflation increases, you can find more of it, it's not scarce. How's Bitcoin? Bitcoin is defined by the code, a code that we've talked about cannot be changed. It is defined in the code, and there will only ever be 21 million Bitcoin in total supply. Out of that 21 million, about 88% has already been mined, and there is expected that about the year 2140, all of Bitcoin will have been mined. There will come a time where Bitcoin's inflation will reduce to less than gold's inflation. And I think that will happen by the next halving cycle for Bitcoin. And it will provably, or rather, it's already proven, but it will demonstrate that it is a scarcer asset than gold starting that time. And then comes a time in 2140 where the inflation hits zero, and that's it. No more Bitcoin is ever going to be mined. So can you imagine the impact? This is something that is far more scarce, and it is verifiable, and it is portable, and it is durable. It beats gold on all these five fronts, and that's really I think the shortest way to explain between Bitcoin and gold, which one is a better form of money.
All right, Vishesh. So I have a question. Okay, so you have very clearly explained both the sides. All right, but I think one thing that probably we're not accounting for is that, and then probably you can answer it with some stats also, is that gold is not just looked at as an investment or not only as a store of value. It also has emotional attachment with it because it is used in jewelry, at least in India. People buy it for occasion and for festivals. I mean, jewelry is worldwide, but in India, people buy it for, ceremonies and festivals and occasions. And there are days on which you're supposed to buy gold. And there is so much. I mean, the whole jewelry industry and religion is very closely tied to each other, right? And so there is emotional attachment with it. And even if you forget the festival part of it and the otherwise also, even across the world, like gold has always been seen as treasure. Like we have used gold as treasure in fairy tales, right? So there is emotional attachment with it. When someone owns gold, it's not just, I feel it's not just saying कि okay मेरे पास इतना value का gold है. It's beyond that. There is a sense of pride about that I own this much gold and that I have this much investment. So don't you think that is something that Bitcoin will never be able to replicate?
Emotional attachment, and jewelry, right? Those are the two use cases we talked about, or those are the two reasons we talked about. So emotional attachment, I think one, the factor is we are in changing time. We are in a changing consumer dynamic. Consumer behaviors are changing, and that whole emotional attachment, religion specifically in India, that religious ceremonies involve gold, and that we decorate our or worship our gods by offering gold to them. All of that, yes, Bitcoin cannot take that away, and certainly not overnight. But we have to realize that we are in changing times. You can see the example in our generation, right? We are a lot less. I mean, how many millennials go by gold, right? Barely any. Uh, Compare that to the previous generations, and every generation you will also see that there was a diminishing trend. So why do you think that trend will suddenly stop diminishing at this point, right? At this generation, we are talking about the future. The future means generations that are younger than us, and the next 2 or 3 generations, they will care a lot less about gold than even we do. And we care a lot less about gold than our parents. We don't even go to these religious ceremonies offering gold. Yes, we go to religious ceremonies, but at least amongst my peer group and in our age group, I don't think we are buying gold to offer it to God and all that. Now, coming to jewelry, again, consumer behavior. Jewelry consumer behavior, if you see right now, what we are seeing is signs of people care more about style, what how a certain piece of jewelry makes them look. And gold doesn't have that kind of luster that some of these knockoff jewelries do, or designer jewelries, right? They don't necessarily use gold, but they are right now being priced higher than pure gold jewelry, because the designer's name on it. And that's a changing consumer behavior. So I'm not saying that it will completely wipe out these use cases today and or in a short period of time, but over the next few generations, we will continue to see the trends that we have already seen. And the other thing, jewelry was offered to gods in the Indian culture and some other cultures, I'm sure, or was considered a status symbol and was sort of displayed on yourself as a display of wealth, right? So you wanted to go out there. There are certain cultures where people wear big gold chains, and there was a time when you wanted to get, like, if you wanted to get a tooth cap on your tooth, you wanted to get a gold tooth, and that was again a sign of wealth, all of this. And so this is my thesis. I believe that if gold does not remain a store of wealth, if and when, and this is just a thought experiment, just found that intriguing to, as I was thinking about it, that if Bitcoin really replaces, maybe in the next decade, gold as a store of wealth majorly, and if gold price does go down and gold is no longer considered a store of wealth, then will it still be used or be sought after as a as jewelry? And will it still be offered to God? We want to give God, or we offer things to God that are valuable to us as a sign of respect, as a sign of our love. You don't offer rocks to God because they have no value. You offer gold to God. But if it no longer is valuable monetarily, the economy doesn't value it, maybe we'll start seeing changing traditions. People who today buy gold jewelry may not care about gold jewelry at all, and they might be happy with whatever designer jewelry, whether it's made of plastic or any other alloy. That is, the value is really in the designer's design and his branding at the end of it. So yeah, that's what I think.